Hey, what's going on, everybody? Welcome back to Bonafide Investing, where we talk all things high yield investing, options, futures, and investment goals in general. If you're new to the channel, welcome. Please hit like and subscribe if you like what we're doing here. Long story short, I've taken a chunk of my net worth. I have been experimenting with high yield strategies for about 2 years, and I have built what I call an all-weather high yield portfolio that I've called Cash Flow Life here, that seeks to, number one, pay all my bills. Number two, maintain and pay down my margin. Again, everything we talk about is not investment advice, not now, not ever. So again, although I was once a financial advisor, I'm not responsible for your wins. I'm not responsible for your losses. Want to talk about today some changes I made to Cash Flow Life this morning. Made quite a few changes, I guess. Somebody had a good comment the other day that just, again, going back to my why I own certain ETFs and closed-end funds, at least now. Again, I'm not married to any of these closed-end funds or ETFs, okay? So I'm happy to buy and sell as I see fit. But I've narrowed it down after owning hundreds of them. I've narrowed it down to a handful of the ones I currently like, again, to accomplish the goals that Cash for Life seeks to achieve. Now, some of the changes I made, I actually sold all of my oil calls, my USO, my XOM, and my XLE. Locked in about a $2,500 gain in about a month. So I was happy with that. With, a little bit of de-escalation going on with Iran and some other things right now. What I might do, I think if oil can fall back into the, high to mid 50s, I'll probably buy some more calls or even sell some puts on, the XLE, maybe USO. But for right now, I wanted to lock in those profits just with, everything going on. And I think the oil still might come down before it runs again. But again, who knows? Oil's had a good run, so I had no problem locking in some of those gains. So now that I did, oil will probably go higher. I also bought a VXX call while the volatility index was down today. The VIX is down substantially, so I added another call, another March 20th call there, as I do think volatility will pick up in 2026. My plan with the VXX calls, is that if we don't have volatility by about, a little bit before March 20th, I'll probably roll these out maybe a month or two. And again, I always like to see the QQQ puts and the SPY puts down. I also sold out of the YBTC ETF, and I added a little bit with that to my long short Ulti Salty fund that I built, that 1-to-1 ratio where I bought roughly the same amount of Ulti, the same amount of Salty, though they are not a perfect long short hedge to each other since they own different stocks. I still like it for just high income, in I think what's a very complacent market with uncertain times ahead. I bought 2,000 shares of YQQQ. I added there on an up day. Again, I do think that this market is so complacent and it's so coiled that it's going to have to break, I think, either up or down at this point. That's my thought only. That's my opinion only. My thought is that we're going to break down. I think we're due for at least a 20% plus correction, if not a market crash. And I've been saying it for a while. So again, hope I'm wrong, but I'm just adding YQQQ in case we get maybe a 10, 15% correction. It will help keep Cash for Life up a little bit better, I think, during those times, and also pay me while I wait, right? So it's going to pay me weekly distributions, historically right around that 20% mark. One of the big moves I made, I sold SGov. So I sold out of SGov. I had a good conversation with a friend over the weekend. She and I discussed it. And she made a lot of sense. And when I hear somebody who has very good logic in their reasoning, I'm going to listen. So I sold SGov. And what I'm going to do, that brought my margin down to about 22% of total margin used. Makes me feel way better about that anyways. Margin buffer now is sitting at 63.33%. So now that I brought that margin down a little over $30,000, I can just look for opportunities in the options market, as well as the current positions that I have. I was going to add to QLDY. I'm going to hold off on that. I want to see how this week's earnings play out in the market. I think earnings personally will be fine. I think they'll probably, most will beat and be in line. However, I don't think the market will blow up and go higher from those earnings. As a matter of fact, I still think that we are headed down for this week. But I've been wrong for about the past week and a half. So, who knows? We might go higher from here. So, again, doesn't matter to me. I was going to start the wheel on realty income and Pfizer today. Again, volatility is just so low. I don't see the incentive right now, but I'll probably sell puts on like Pfizer, realty income, maybe a Verizon or AT&T or something like that, and maybe a utility, right? Maybe get 4 or 5 positions that I start the wheel on. But again, volatility, the VIX is still low. We're down in the 16, 17 range last I checked. So again, if volatility starts picking up, I'll start making, probably more option trades there. Sometimes the best play is to do nothing. So, cash flow life, that might be where we're at. But the charts on Bitcoin look absolutely awful. I studied a lot of them over the weekend, is why I decided to sell YBTC, which probably means Bitcoin will go up now that I sold, right? I always joke I'm a horrible market timer, but it's okay. I wanted to lock in the loss there and put it into the long short just for more diversification. I still have Bitcoin exposure through holdings like WPay, YMAX, not only Bitcoin, ETFs, but also things like Coinbase, Strategy. I also get them sometimes through things like KYLD, OLT, Salty. So again, I'm still getting exposure to Bitcoin. I just wanted to minimize it, as I think that we're probably going to fall farther on it. And, I think that if we can get maybe another 10, 20% down, I'll probably buy back into something like YBIT or buy BTC just to get that high income for cash flow life. Now, I did change the dollar cost averages in, so you can see a lot stay the same. Again, I'm dollar cost averaging $200 per market day back into cash flow life across many of the ETFs, not all of them, but basically everything from TLTW all the way through IYRI. WPay, I have to manually buy. I buy $20 per day into WPay. I did mention that I evened out my WPay and YMAX to pretty close holdings. So Robinhood doesn't allow for WPay to be automatically a recurring investment. So I'll just do that on my end. No big deal. So again, what I did, I just kind of leveled everything out. GDXY now is $5 instead of $4. I actually brought QLDY up from 10 to 15. This has been my favorite NASDAQ holding to date. Again, I think Roundhill is being very prudent. I like that 0 DTE. And again, Neos is probably my favorite of the bunch, but been really happy with QLDY overall. Haven't seen a lot of NAV erosion. It's moved pretty in line with markets, and it has captured some upside on up days. So again, if we do turn down in the market, yeah, I do expect all of these to get hammered pretty hard. But again, I like to dollar cost average back when prices are lower anyways, as I think that most assets are still, very elevated, near at all-time highs, which I don't really like to buy at. So I also upped TLTW, get a little bit more of the long bond exposure. Historically, TLTW pays about 12% monthly distributions. I like that. It's just kind of a stabilizer in the portfolio. I did say I think rates are going to go higher. They have, not as high as I thought at this point. But irregardless, I'm dollar cost averaging back every day. So even if rates go higher and volatility does return to the bond market, I should see higher distributions from TLTW to kind of hedge the potential downside if rates do keep rising. Gold is my favorite example. Gold has had a miserable Friday and so far today. So again, I like buying back when those prices go down. The main reason cash flow life is down so much today is because of how bad gold has done. I'm still up on all these gold positions, but hey, buying back when they're down, 8, 9, 10% one day, 3, 4, 5% the next. I'll take that all day long. So dollar cost averaging into my favorite asset, gold, is a gift. Again, it's one of those things where I hope gold does go down. I'm a fan of gold, but it's a thing that I hope it never goes up. It is insurance. And I've always said, don't combine insurance with investing. However, for my gold holdings, specifically for a cash flow life, I do like to combine the covered call approach and the options approach to pull income from gold itself. IYRI, maybe adding a little bit more here. I want to see what rates do this week. I think a lot of the whole Kevin Warsh announcement has been priced in. Again, the Senate needs to confirm his nomination. So I think once that is either confirmed or whatever, I think that's when we'll see the whole Kevin Warsh change, a lot of it priced in to the markets. Iran, I think there could be still a big surprise there. Who knows? But, a lot of that I think has been priced in as well. So again, yeah, I think markets, we do head down from here. Again, who knows, right? I'm not a good market timer, but I do think we're going to have a tumultuous, rocky 2026. So why do I own all these? Again, just kind of go back through. The whole goal of TLTW is to be that long bond exposure. Historically, in deflationary times, TLT has done rather well. I think inflation's coming back, and I don't think that'll necessarily mean that inflation will be priced into all assets. And I think gold and silver might have priced in a lot of future inflation already. But TLTW, I think if we do get a market crash, we'll do pretty well. It'll help be a stabilizer across the portfolio. So again, very little movement. It was had a better 25 than a 24. So I've been happy with it. CRF, my favorite closed-end fund, or one of my favorite closed-end funds. I take that back. FOF is actually my favorite, but I don't use FOF here. I only use it in my retirement accounts at Robinhood because it's got a 50% margin buffer and it distributes about 8%. So I like CRF, tracks the index. It's held up really well, especially on Friday. It held up really well when a lot of things were down. WPay I trim because it's a 1.2 leverage. If we do head down, it's just going to fall farther faster. So I wanted to take some risk out of WPay and I put it into YMAX, which has even more holdings than WPay. But YMAX actually got hit harder lately because gold has a little bit more gold exposure. So it just got hammered. So WPay and YMAX are my ultra high yielders. I don't expect a lot of growth. I expect NAV erosion. But again, they help maintain and pay down the margin each and every week. I've got my Q plays, QDTE, which is the zero DTE play. It's my favorite zero DTE. I like it from Roundhill. QLDY, really cool Defiance fund that pays twice a week and uses a lot of credit spreads, which is nice. Doesn't miss a lot of the upside. It'll take a lot of downside, especially on big down days. That's the one downside of QLDY. So if we fall 2, 3, 4, 5% or more in a day, QLDY is just going to get absolutely crushed. The nice thing is those days are few and far between. QQQY, this is what I'm trying to build cash flow life around when it comes to my NASDAQ plays. So what I'm contemplating doing also now that I brought my margin down, I'm thinking about putting more into QQQI and SPYI each and every market day. I'd like to see a market downturn first where we can kind of confirm maybe a little bit of a fall before I start doing that. Because again, these levels where markets are at don't make me comfortable dollar cost averaging more into it right now. XDTE, just like QDTE, that's just my S&P 500 zero DTE play. I own that again for high income to track the index to an extent. But again, it will probably underperform, for the most part over time, just because it's got those high distributions. SPY-I, the same thing as QQQI. RDTE, that's my Russell 2000 play. What I like about that is that I think the Russell has underperformed the other indices for years. I think in late cycles of bull markets, the Russell does well. I think we're in the late stage now. Whether the collapse happens tomorrow or 2-3 years from now or whatever, I think RDTE will be something that'll grow while it distributes high weekly income. GDXY, small position. That's just my miners position. Again, I like gold better than the miners, but I think miners might actually hold up better because even though gold's gone down about $1,000 an ounce in a few days and silver's down, 35, 40% in a few days, the miners, that's not really going to hit them too hard, I don't think, in their bottom line, considering that the precious metals are still really high compared to their historical levels. So I think the miners might do okay. That's why I'm not getting scared out of my KYLD position, which has high exposure to the miners. Even Ulti does right now as well. So I think the miners actually do better than the metals for a little bit. But again, we will see on that. GLDY, I love buying it. 3.5% down. It was down about, 7-8% Friday. So it's down well over 10%. Same thing with IAU and IGLD. These are all down double digits. So yeah, dollar cost average at lower levels. The nice thing is I'm still up on my cost basis of where these sit. So yeah, I'd much rather accumulate more shares on God's money, aka gold, each and every day than not. So really happy with gold. Again, gold's, I've said it before, it's the asset I'll probably sell last if I ever had to sell out of my assets and go strictly all to cash. Real estate, I really want to bump this position up, but again, I'm going to wait for rates. I think they're going to climb a little bit higher. I think the 10-year is going to go at least to 4.5, if not higher. But man, rates have just been hovering, just sitting there at about 4.25, not doing much. KYLD I like is just a consistent payer of about 38% each and every week. It got hit pretty hard Friday from the precious metal sell-off. It's flat today. It's actually holding up better than I thought it would with everything going on with gold and silver. But again, it's mostly a miners exposure. And I think the miners are doing better because the miners usually move in tandem with the markets, stock markets, as opposed to the underlying physical commodity or the metal. Ulti Salty, I don't know what I'm going to do with this long short. I might add a little bit more and just let it pay out. Because right now I'm looking at about $1,900 a month between the two with very low exposure. So again, I've only got maybe 13,000 or so in each. So 12 or 13,000. So not a lot. In the YQQQ, this is another one with my puts that it just helps me sleep well at night. But the nice thing is it's paying me each and every day, whether markets are up or down. And when markets do go down and we do correct, it'll, prevent a lot of downside as well as keep paying me there. So again, wanted to kind of review the portfolio today. I don't foresee a lot of changes the rest of this week, to be honest with you. I want to see earnings, kind of how everything plays out there. But I don't think I'll be making a lot of changes to Cash Flow Life. I'll do a portfolio update later in the week. If there's any other videos, any other topics that you guys want to see, let me know. I know that I've had some comments in the past, and maybe I might have even forgotten about some of the requests, but let me know. Please like and subscribe. Helps me make more videos. Again, always remember to trust God first and foremost. Rely on math. Rely on charts and ignore the noise, the bankers and the politicians. Hope you got something from today. Have a great day.